Let's begin with this word solid. I think of Yellen, Slack, there's a number of others. We have a solid economy. What is a solid economy right now?
I think our outlook is really for sustained economic expansion, Tom, and that's important because as of about a week from now, this will become the longest expansion in U.S. History. We had very strong growth in the first quarter, north of 3%. We could see some moderation in growth this year, but the economy's baseline outlook is good. Sustained growth, a strong labor market, and inflation near our objective.
Then why are we speaking of cutting interest rates?
Well, because in this environment, Tom, especially in the last 6 or 8 weeks, there have been elevated uncertainty about the outlook. The economy is hitting some cross currents now. There's been a marking down in global growth prospects. There's uncertainty about international trade. There's some evidence that's weighing on sentiment a bit. So we're monitoring that closely, and we'll act as appropriate to sustain expansion.
I can go 4 or 5 ways. Let's begin with this new word, uncertainty. Uncertainty are non-policy shocks. We focus on the trade war. We focus on the president, but there's many other shocks out there. Mr. Draghi dealing with his shocks. Mr. Kuroda and others dealing with the Norwegian bank just yesterday or the day before raising rates because of the shocks they have. What's the non-policy shock that matters for the vice chairman?
Well, I think that we really have uncertainty in the sense that there's always some geopolitical uncertainty, but there's also uncertainty about how the global economy navigates at a point. You know, you have negative interest rates in the Eurozone and in Japan. Those countries are well away from where they want to be. And I think that is a factor as well.